Stocks see a sharp drop in fears of a US-Iran escalation of tension. Realty, utilities, consumer durables and industrials are big drags, while IT and healthcare manage some green.
And PM Modi declares India is not fearful of AI but sees it as an opportunity. Alphabet CEO Sundar Pichai called it as a once-in-a-generation opportunity to improve lives, while Anthropic's top boss also sees India playing a central role in its evolution and adoption.
Tata Group Chair N. Chandra says TCS will ride the AI wave and IT companies will have greater responsibility in the AI era. TCS CEO adds that there is no need to panic.
Jio will connect India to the intelligence era, says Reliance Group Chair Mukesh Ambani. He commits to an investment of Rs 10 lakh crore over 7 years to build India's sovereign compute infrastructure, including 10 gigawatt of green power. He adds that Jio will also prove that AI creates jobs.
And fears of military action by the US against Iran sends oil prices soaring to over $70 per barrel. Reports of Iran shutting the Strait of Hormuz and a sharp drop in India's imports of Russian oil only add to the mix. Stocks of producers gain and users slip.
Hello, good afternoon. You have tuned into Halftime Report, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala, with me my colleague Ekta Batra. Ekta, good afternoon. But markets seem to have come off from the day's highest point and a bit of a downward slope through the day, slight bit of a decline that we've seen creeping into the markets. As of now, 25,650 is what the Nifty is at, but it's at the day's lowest point. Like I said, look at it. It started at the high and then it started coming off. Now at the day's lowest point, 0.6% of decline for the Nifty 50. Sensex 2 is down more than 590 points in the trading session. Broader end of the market, let's look at the mid and small cap. That too is performing in line with what the benchmark indices are doing. The mid cap is down 0.7%. Small cap also is seeing some bit of a pressure, Ekta, today.
Hi, Vinny. Yes, absolutely. The markets have been unable to sustain the gains that we started with because we got a good US handover. We had the tech stocks which were higher, but all of that seems to be coming undone. So remember that the street was optimistic that maybe, the Nifty could make a dash for 26,000 today. But nonetheless, we've seen that sort of pressure come through on an intraday basis. So the banks have seen pressure in today's trading session as well. Remember that yesterday it was the index which was outperforming and managing to hold up. We have the mid caps which are underperforming, and needless to say, we have an advanced decline ratio which is trending firmly on the declining side at this point in time. So 1,600 stocks advancing to around 2,200 stocks which are declining. Lot of stock specific action in today's trading session. So that dominates, for example, Newgen as well as Netweb. All of these stocks are gaining in today's trading session. We have Dixon Technologies, which is in focus because CLSA has downgraded the stock to hold from outperform. We have Blue Jet, Lakshmi Dental. They are buying after, there is some amount of buying seen in those stocks after the sharp fall that we've seen. Remember, both those counters, for example, are down anywhere between 30 to 25% respectively. And even something like a Coforge, which is in focus because CLSA has a high conviction buy on that particular counter. So a lot of stocks in focus, but let's tell you about what we have on the show today. We'll put the spotlight on commodities in our What's Trending segment and focus on MCX as well as crude sensitives. We will also bring you voices from the India AI Impact Summit and what the top bosses had to say on the developing AI sentiment and more. And in our commodity corner, Manisha will be speaking to ISMA's Deepak Balani and will be putting the spotlight on sugar.
Okay, let's move on. And in our What's Trending segment, we are tracking strong action in commodities. MCX is in focus along with gold, silver, ETFs after government withdrew the additional margins that had been imposed on gold and silver futures earlier this month. Remember, those margins were raised following the sharp spike in precious metal prices. At the same time, we are also watching crude very closely. Brent crude oil has jumped back to around $70 per barrel overnight amid renewed geopolitical tensions involving Iran, the US and Israel, bringing energy sensitive back to focus in the market as well. First up, let's go across to Sudarshan, who's here to tell us the action that's happening in MCX. So over to you.
So MCX shares are in focus today because of the company early in the morning has announced that it's going to withdraw the additional margin that was imposed in early Feb on both gold and silver futures. So on gold, it has removed or withdrawn the additional margin of 3%. On silver futures, it has withdrawn the additional margin of 7%. Remember, on Feb 5 and Feb 6, these additional margins were imposed after a sharp increase in both gold and silver prices were seen in January and early February. But now, in the last 2 weeks, there is a sharp drop. Silver price has fallen in the range of 16 to 18%. Gold too has fallen in the range of 4 to 5%. And that's the reason why MCX has gone ahead. Not only MCX, but NSE has gone ahead and withdrawn these additional margins. So what will it do? It's in all probability, it's going to boost the volumes on commodity front, or say gold and silver front. And that's the reason you are seeing a big move in MCX despite market coming off opening highs.
Okay, all right, Sudarshan, thanks very much for that. So as you can see, MCX is up 2.5%, but a lot of the Tata or a lot of the silver ETFs are buzzing in today's trading session. So they're seeing some amount of good upside on those counters. But crude is the other one that we're tracking. It's edged higher after fears of military intervention by US in Iran. Manisha is joining in with more details on this. Manisha, go ahead.
Well, thank you for that. Yes, crude oil definitely in focus with 4% of gains in the overnight market. And with that, we are trading at around $70 a barrel for the Brent prices there. It's not just crude. If you look at the heating oil prices, they gained up by 5% overnight as well. This is as US and Iran are yet to reach a potential nuclear deal. And there are now fears of military intervention by US in Iran. There also have been reports that Iran is temporarily shutting parts of Strait of Hormuz. This was done for a few hours. Whether it has been opened or not is something that the reports have not clarified yet. But this is a concern. Iran clearly showing a show of strength there. And then you have Iran and Russia, which have conducted various army drills therein at the Sea of Oman and also Northern Indian Ocean. That is going to happen today in the evening. Another thing that the markets will keep an eye on. And then apart from that, you have Ukraine-Russia talks in Geneva, which have ended without any breakthrough. So both the big conversations that the markets were keeping an eye on haven't yielded any results at all. Interestingly, there is a report from Eurasia Group which says that with the whole data and conversations and statements coming in from Iran and US as well, there is now a 65% probability of a US military strike on Iran by the end of April itself. So that's what the street is watching out for. The other thing is the support for crude also is coming in from the fact that you have seen the US inventories decline, the US data in sense of industrial production, home sales has come in on the positive side. And with India also cutting out on Russian imports, India is also in market to buy at market levels, supporting prices yet again. This is what we've done in sense of prices in the year 2026. We are up by 14%. This is after 3 years of constant decline that crude prices have put out. This year it started strong, one, as the data gets better, and two, as the geopolitics comes on surface yet again. Markets are also looking at a big ranges already trading in the international markets there. So when you look at 2025, Brent made a range of around 82 on the higher side to 58 on the lower side, which is a $24 of a range. For this year, we've already traded from 60 to 70 right now. So a $10 of a range has been done in less than 2 months. So volatility in crude oil prices and some geopolitical premium really seems to be driving it.
Absolutely, volatility in crude oil prices, and just in this couple of months we are seeing this volatility as well. Manisha, thank you so much for that. But let's move on now, and we have Gaurav who's here with us to take us through important stocks that are moving around in today's trading session. Afternoon, Gaurav.
Well, yes, if you look at Nifty, we are seeing some kind of weakness, but let's not forget about Nifty IT. It is up in trade, and the reason being that the AI summit. Now, today is a crucial day given that there are a lot of important speakers who will be addressing the summit. We have seen Prime Minister Narendra Modi, Mr. Mukesh Ambani, who has already given their speech, but we have got lineup like Sam Altman, Rishi Sunak, who is yet to talk about it, and the AI developments. But if you look at Nifty IT as well, not all the stocks are onboarded in this rally. We are seeing stocks like Persistent and Emphasis still under pressure. If you look at volume-led gainers, we have companies like Tata Investment, Nitin Spinners, NDL Ventures. All of these companies are not only up in trade, but they're also seeing some strong volumes in trade today. If you look at MCX now, company has withdrawn their additional margin requirements, and that is the reason why market has cheered this company. The stock is up more than 2.5%. And let's also not forget about a small company called TIL Limited. There is going to be board meeting on 23rd of February, and that is something which is cheering the stock. If you look at the stock performance, it is up in trade more than 5%. On the losing side, we are seeing Nifty Realty. If you look at the top losers like Lodha, Phoenix Mills, all of these constituents are under pressure. Nifty PSU Bank is also something that we are keeping an eye on, because for the last 3 days we are seeing some rally, but today we are seeing a pullback from that rally in Nifty PSU Bank specifically. We have individual names like Jindal Saw, where we saw suspension letter coming up from API, and that is the reason why the stock is down. NCC, where NHAI has debarred the company from participating in NHAI bids for the next 2 years, and there also we are seeing some pressure. And let's also not forget about Dixon Tech, because CLSA has downgraded the stock and also cut down the target price, and we are seeing some pressure building up in this stock as well. Lastly, let's also focus on OMCs. Some pressure is building up here as well in the likes of HPCL, IOCL, BPCL. All of these stocks are down in trade, and the reason being that there is some pressure building across Iran and US overall trade, overall the tension between these two countries, and that is something which is putting pressure on crude oil, and we are seeing some downward pressure on OMCs in a day-to-day.
Okay, all right, Gaurav, thanks very much for that. So that's the entire list of stocks which are buzzing in today's trading session. We're going to take a short break, but we'll get you a lot more on the markets, lots more stock-specific action on the other side. Stay tuned.
Welcome back to Halftime Report on CNBC-TV18. The Nifty has slipped a bit further and now down almost 190 points in the trading session. Slight bit come up from the day's lowest point, but still near the day's lowest point for the Nifty 50. But let's go across to my colleague Parikshit, who's in conversation with Tata Sons chairman N. Chandrasekhar and at the Tata Pavilion at the Bharat Mandapam.
We are at the Tata Sons Pavilion here at Bharat Mandapam, and we have with us the Tata Sons Chairman, Mr. N. Chandrasekharan. Sir, thank you very much for being with us. Let me begin by asking you about your partnership with OpenAI. How is that going to transform the way Tata Group functions, and how will you leverage this partnership?
I think the broader objective is for the Tata Group to be on the forefront of this AI revolution. So it means a number of things. It means investing in AI and building the capability across the stack, and also to leverage each of those for all companies around the globe. And looking inside the group, all of our companies have to go through this transformation, and all of our 1.1 million employees have to go through AI education or to leverage AI in whatever they do, so that they can do their job better, empower their teams. So it's a massive undertaking. The relationship with OpenAI is very strategic, and we have signed up the first 100 megawatts of capacity in our AI data center, which will scale over a period of time to 1 gigawatt. We will be building a lot of industry solutions. We hope to leverage their LLM platform as well.
Right. Now, what do you think gives India an edge in this AI revolution taking place globally? We're an IT powerhouse, but how do we need to change in order to take advantage?
See, I think in AI they've got we've got to look at both dimensions. What AI can do to India, and what India can do in the AI for global use. From the Indian perspective, um, you see, we have enormous opportunity for growth, but at the same time we have a lot of challenges, and all our challenges need technology. In fact, I feel it's a very special moment, and we should be grateful for this moment, because AI can empower all our people. It can go to the nooks and corners of the country. It will be very inclusive. It will help us to bring hundreds of millions of people into the market by giving them the access. Then we will be able to address healthcare in a holistic way and social inclusion in a holistic way. So, and then all our companies will leverage AI to be able to build a moat for their businesses. Now, India has a huge talent, and India has solutions that we will build at scale. All of this can be replicated around the world. I think if you take the full stack, our capability lies in building data platforms above the foundation models. And they could be India specific, they could be industry specific, they could be in the context of the enterprises. Then build agentic AI solutions, because we understand the context, we understand the industry domain, and take those solutions to a place where it can work for everybody.
Right.
So I think we have lots of different modes as a country. Talk about the modes for a country. There are multiple modes for a country, and we've got green energy.
Yeah.
I mean, we should look at all the positives that we have and use that to address the negatives.
All right. Now, when it comes to Tata Sons, in the next 5 years, how are you going to be deploying AI? Is the Tata Group looking to build large language models? How are you looking to solve certain global problems using artificial intelligence? What's going to be your big bet?
See, I don't want to talk about 5 years and so on and so forth. I've already told you what are the 5 different things that we are doing. As I said, our job is to transform our companies for the AI future, help each one of our employees to perform better, to empower them so that they can empower their teams and also the communities in which they operate. But in terms of specifics, I already told you what you're going to do in semiconductors, what you're going to do in data platforms, and AI operating system for industrial solutions, and agentic AI for multiple industries. So all of this we will have to do, and we'll have to accelerate, and the opportunity is real, and we will learn. There will be many new developments that will happen. We will work with partners. There are a lot of bright minds and upcoming companies. So we'll work with domestic players, international players to build an ecosystem of sorts to be able to make an impact.
Okay, all right. So that's the word coming in from the Tata Sons chairman. But industry leaders, many more industry leaders, have spoken at length on AI at the India AI Summit. In fact, the Anthropic CEO says that India has an absolutely central role to play, both in terms of opportunity as well as risk, while the Google CEO, Sundar Pichai, says AI will redefine the workforce. It will create new roles and jobs. Listen in to their views.
India has an absolutely central role to play in these questions and challenges, both on the side of the opportunities and on the side of the risks. As a sign of our commitment, we just this week opened an office in Bengaluru and hired Irina Ghosh. We're therefore we have been partnering with for several months, nonprofits such as the XStep Foundation, Pratham, and Central Square Foundation to use our models to advance digital infrastructure, education, agricultural efficiency, and health, in the hopes of spreading AI's benefits across the global south, starting with India and diffusing out to the rest of the global south. On the risks, India is the world's largest democracy and can be a partner and leader in addressing the global security and economic risks of the technology.
AI will undeniably reshape the workforce, automating some roles, evolving others, and creating entirely new careers. But no matter how bold we are or how responsible, we won't realize AI's full benefits unless we work together. Governments have a vital role that includes as regulators, setting important rules of the road and addressing key risks. And importantly, also as innovators, bringing AI to public services that improve lives and accelerating adoption of these technologies for people and businesses. Tech companies must also step up, building products that boost knowledge, creativity, and productivity to help people achieve their dreams.
So words coming in from a lot of global CEOs, but OpenAI becomes the first customer of TCS data center business, a 100 megawatt capacity part of the global AI infra initiative, Stargate. Now, Rima is joining us with the key contours of this tie-up and what will it mean as well. Rima, over to you.
Thanks so much for that. As you rightly pointed out, OpenAI will become TCS's first anchor customer for its data center capacity. In the initial phase, TCS and OpenAI will build infrastructure for in the first phase, it will be for 100 megawatt capacity with an option to scale it to 1 gigawatt. So just to quickly recap what TCS's data center ambitions are. What they had said 2 quarters back is their target is to 1 gigawatt scale data center capacity over the next 5 to 7 years. This will require an investment of $6.5 to $7 billion. And to enable the first phase, TPG has planned to invest close to about $1 billion of equity stakes. So this is known that the company wants to invest 1 gigawatt of data center capacity, build that. But what is new today is the fact that OpenAI and TCS will be joining hands. OpenAI will become TCS's first anchor customers, and together they will go. It will be a joint go-to-market strategy to use OpenAI's intelligence with TCS's infrastructure and products and scale it up at an enterprise level. Now, the question is, why is TCS even doing the data center infrastructure play? This is a software company, it's a services company, so why infrastructure? When Shireen chatted with K. Krithivasan, the CEO of TCS, this is what he said. We will be able to participate more in the AI ecosystem if you operate across multiple layers. There is an infrastructure layer, a model layer, application layer, intelligence layer, and they want to increase their participation in each of those layers, which is why the pivot from services to infrastructure as well for TCS.
Okay, all right, Rima, thanks very much for that. In fact, Reliance steps up to make 3 key announcements at the AI Summit. Mukesh Ambani pledges 10 lakh crore over the next 7 years, starting 2026, all focused towards building an ecosystem for AI in India. Rima, tell us more about this.
Well, let me quickly first run through the key announcements. One, he said the way Jio connected India to the internet era, Jio intelligence will now connect India to the intelligence era. And he said we will reduce the cost of intelligence as dramatically as we reduce the cost of data. Now, this is huge because if you remember that prior to 2016, which is when Jio was launched, data in a way was luxury. Now it's become a utility. The cost of data used to be 200, 300 per gigawatt. And we've seen Jio bring down the cost of data by more than 95%. And now it seems like they will be applying the same playbook to intelligence. And that is a big deal. So they're planning to make, intelligence, AI intelligence accessible, available and affordable for everyone. They also said that Jio, along with Reliance, will be investing 10 lakh crore over the next 7 years, starting this year. And they also have laid out their ambitions to build 1 gigawatt scale data center. Now, this was announced in the AGM. That is not new. But what incrementally they shared this time is that 120 megawatts of that will come up for stream in the second half of this year. Just to end with what Mukesh Ambani had to say, we will partner with the very best tech companies in the world, not as importers of intelligence, but as co-architects of India and India's AI century. The best of AI is yet to come. But as I said, the big announcement is the fact that Reliance Jio plans to bring down the cost of intelligence. They're manufacturing the intelligence here, and they will be bringing down that cost to make it accessible and affordable for all.
Okay, bringing down the cost of intelligence and best of AI is yet to come. That's the word coming in there. Rima, thank you so much for that and giving us details in terms of announcements that came in from TCS and Mukesh Ambani speaking at the event as well. But on that note, we're going to step into a very short break. After the break, we'll come back with more on news and updates and stock-specific action on the other side.
Welcome back. Well, definitely trending lower for the markets now. So down around 0.8% currently for the Nifty. We have the mid-cap index also, which is step in step with those cuts, along with the bank Nifty, which is also showing a cut of around close to 500 odd points. So as you can see, there's a slice and dice which is taking place for all of the key indices at this point in time. But we're talking about one particular stock that is looking very good in the past couple of days. That's Netweb. They've made some announcements with regards to a supercomputer as well. And AI using that. So, Vinny, tell us more. The stock has rallied around 17% in just 3 days.
Absolutely. Just in the last couple of days, that 17% up move. But Ekta, do not forget, in the last 1 year also, the stock has run up a lot. 142% uptick in just the last 1 year. Now, obviously, yesterday, the announcement came in at that India AI Impact Summit, where they said that, you know, they are going to be launching some AI supercomputers. Now, this is going to be the world's smallest AI supercomputers. They're going to be using Make in India products powered by NVIDIA. So they already have a tie-up with NVIDIA, and they're working with the Grace Blackwell architecture of NVIDIA. So with this tie-up, they're going to be making these AI supercomputers. Now, just to take a step back, look at Netweb's move that has come in terms of the AI systems, this specific segment for them, and how the contribution has increased in just the last couple of years for them. FY24, this segment accounted to around 11% of their revenues. It moved up to around 15% in FY25. And 9-month FY26, the results, that was Q3 time, which was reported, 9-month period for FY26, that's 47.6% contribution that came in from AI contribution for them, AI system revenue contribution. Now, what does it mean for the company? They have spoken a lot about AI in the last year, and that is what, the street is liking as well, an opportunity if you want to play AI, and that is what they are looking at from Netweb Technologies. The company has a good order pipeline, robust pipeline considering all the tie-ups that they have with NVIDIA, Intel, AMD as well. They've also launched Skylast.ai, which is an AI native application with the built-in GPU abstraction, as well as there is an ongoing benefit they have because of the government of India's India AI mission. So that also is increasing their order book. They're getting a lot of order books on that front. And even in terms of revenue for Q3, there was a large order that was for the government of India, which led to the boost in terms of the revenue for the company. The cash conversion cycle is improving. Also, in terms of the net cash on books, that's also at 190 crores in Q3. So strong in terms of the balance sheet, nothing to worry there. As well as in terms of valuation, they still continue to be near those peak levels for them. Peak valuations 104 times, but current PE is at 86 times, slightly below that, but still on the higher side versus the historic average, which was somewhere around the 65 times as well, Ekta.
Okay, all right. Yes, that's interesting. So that's the update with regards to Netweb, which has really been attracting a lot of mind space in the past couple of trading sessions. Just want to point out that stocks such as Newgen as well as Netweb, while you are seeing them surge in the past couple of days, they are significantly off their 52-week highs. So maybe that should come up for you to give you an indication in terms of where they stand vis-a-vis their 52-week highs. As you can see for Newgen, 56% away, and Netweb around 20% away from its 52-week high. But let's get talking more about the markets. We have Nigel joining in to tell us what he's tracking in the F&O space. Nigel, over to you. It's a down day.
Well, that's right. It's a bit of risk-off that's playing out here. A few factors that are plaguing the market. One is the geopolitical tensions. They're yet again on the table from the global front. So you don't know what's going to happen with regard to that. Will Mr. Trump go ahead and attack the Middle East? That's important. So that's one cue. The other important factor is that since it's a public holiday, and a lot of banks are shut, the domestic participation is actually relatively lower, and they're the ones that have been holding up the market. So that's plaguing sentiment in today's trade. It's risk off. The VIX is spiked up close to around 10% the last time I checked, and that's what we normally see, right? There's an inverse relation between the Nifty as well as what the VIX does, and that's why we're seeing a bit of a spike out there, but that's still far away from that 17-18 mark odd before you start getting concerned. The Nifty PCR, that's come down closer to around 0.8. Just in yesterday's trading session, by the end of it, it had moved to around 1.2, and at the start of the week, it was 1.6 odd. So it had moved up drastically. Now it's cooling off a little bit at around 0.65 odd. That's when you normally see a technical bounce on the Nifty. Because in today's trading session, you have calls that are getting written. 25,800 call. The premium has come down to around 70 bucks from around 148 rupees. The 25,700 call, the premium's come down to around 110 rupees from around 212 rupees. So there is aggressive call writing is what we've seen, which is called the PCR, to come down to around 0.8 odd. Individual stocks in focus. RBL Bank, that was relatively underperforming. Today it's outperforming. There's a bit of a short squeeze that's taking out them. Explains why the stock is up. Open interest is down. On ONGC, because that's a direct play on Brent crude prices, which have spiked up. There is fresh buying being seen in the F&O market, as well as in the cash market. There is some delivery-based buying that I'm observing on that one. Kotak Mahindra Bank has come in for some shorting, while CDSL saw a bit of a bounce in the last few days. There are some unwinding of positions that we're seeing on CDSL. Net, a bit of a weak day. Risk of sentiment is plaguing the geopolitical tension. I think that's what's plaguing sentiment. And the Nifty is very close to the 20 DMA. We'll expect some kind of a fight at around this 20 and 200 DMA, which is in the vicinity of 25,300 to around 25,500. Back to you all.
Okay, Nigel, thank you so much for that. But with that, we're actually going to slip into a very short break. After the break, we'll come back with commodities, and Manisha Gupta will be joining in.
Welcome back. Joining us on the show now is Deepak Balani. He's DG at ISMA. Mr. Balani, hi, thank you so much for joining in. I do understand that ISMA has recently come out with a revised sugar output till time. What is that number looking like as compared to previous year? And what's your sense now on the overall sugar output for the current season?
Thank you, Manisha, for having me in your show. First of all, ISMA has still not come out with a number. We have assessed our crop. The meeting is on 25th, where our committee members are going to deliberate. But having said that, I can at least tell you that the earlier number which we had published in December seems to be coming slightly down because of slightly lower yields in Maharashtra and Uttar Pradesh. So it might be slightly below than the earlier production. But as I just said, numbers would be given on 25th. But that is also not of a concern because we are having sufficient stock in the country. Anyway, the production which we are estimating will be much higher than the last year. So I don't see any problem in sugar stocks in the country.
What is an approximate output number that you're working with at this point?
Manisha ji, as I just said, that the number is still not finalized.
Okay. What was the earlier estimate then?
The earlier estimate was 343 lakh tons, and that was before diversion.
Okay.
It may come down a bit.
All right.
Specifically because of the lower yields in UP and Maharashtra.
Mr. Balani, we do understand that ISMA had been asking for export, and that number, the allowed export number now stands at 1.5 million tons. How much has been contracted? How much has been exported till time? And with the international sugar prices just about or below 14 cents, how is that working in sense of parity?
Way back in November, when we had requested the government to give 2 million tons of sugar, we anticipated that there would be a window between Jan to March where the maximum exports can happen. But unfortunately, because of too much of global surplus, specifically, the raws coming in from Brazil and the international markets way below the cost of production and domestic prices, only about 4 lakh tons has been exported till now. That includes both the contracts and the physical movement. Having said that, what I anticipate is by 30th of September, I think maximum to the tune of around 800,000 to 900,000 is something which is doable. And that is, and we will have to see how the Brazil is looking after the season starts. But I don't see the entire 1.5 million tons being exported in this season. On top of it, government has actually announced another 500,000 under the open license where the willing mills could export. That is also really somehow has depressed the international market.
All right.
So situation is not that great on the export front. But as I said, The domestic prices are looking slightly better than what it was around a month back. So that's a saving grace at least.
All right. Very quickly, what's your sense on the ethanol capacities right now, and what is it that you're asking government on that front?
On the ethanol, we already have a diversion of 3.4 million tons. And
Okay. All right,
as you
Manisha,
know,
I
we
think
have-
we'll have to now cut across to the
Yes.
AI summit. We have Sam Altman speaking, so let's cut across.
More than 100 million people in India use ChatGPT every week. More than a third of them are students. India is also the fastest growing market now for Codex, our coding agent that works to help people develop software faster and better. India, the world's largest democracy, is well positioned to lead in AI, not just to build it, but to shape it and decide what our future is going to look like. And it's important to move quickly. On our current trajectory, we believe we may be only a couple of years away from early versions of true superintelligence. If we are right, by the end of 2028, more of the world's intellectual capacity could reside inside of data centers than outside of them. This is an extraordinary statement to make. And of course, we could be wrong. But I think it really bears serious consideration. A superintelligence, at some point on its development curve, would be capable of doing a better job being the CEO of a major company than any executive, certainly me, or doing better research than our best scientists. As we prepare for this possibility, we are guided by three core beliefs. Number one, we believe that democratization of AI is the only fair and safe path forward. Democratization of AI is the best way to ensure that humanity flourishes. On the other hand, centralization of this technology in one company or country could lead to ruin. The desirable future a couple of decades from now has got to look like a world of liberty, democracy, widespread flourishing, and an increase in human agency. Some people want effective totalitarianism in exchange for a cure for cancer. I don't think we should accept that trade-off, nor do I think we need to. AI should extend individual human will. We'll probably need superintelligence to help us figure out the new governance mechanisms to ensure that this happens fairly at scale, and to avoid problems like extremely unbalanced compute access or something else. Second, we believe that AI resilience is a core safety strategy. We don't mean that this is the only safety strategy. We will continue to need to build safe systems and solve difficult technical alignment challenges. But increasingly, we need to start broadening how we think about safety to include societal resilience. No AI lab, no AI system can deliver a good future on their own. For an obvious example, there'll be extremely capable biomodels available open source that could help people create new pathogens. We need a society-wide approach about how we're going to defend against this. And third, the future of AI is not going to unfold exactly like anyone predicts. And we believe that many people need to have a stake in shaping the outcome. The development of AI has already held many surprises, and I assume there are bigger ones to come. We understand that with technology this powerful, people want answers. But it's important to be humble about what we don't know and always remember that sometimes our best guesses are wrong. Most of the important discoveries happen when technology and society meet, sometimes have some friction, and co-evolve. For example, we don't yet know how to think about some superintelligence being aligned with dictators and totalitarian countries. We don't know how to think about countries using AI to fight new kinds of war with each other. We don't know how to think about when and whether countries are going to have to think about new forms of social contracts. But we think it's important to have more understanding and society-wide debate before we're all surprised. Of special note, and related to all 3 points, we continue to believe that iterative deployment is a key strategic insight, and that society needs to contend with and use each successive new level of AI capability, have time to integrate it, understand it, and decide how to move forward. This has been working surprisingly well so far. If we are right, and systems continue to improve at this pace, it's going to change the economics of a lot of things. A really great thing about AI progress is that it looks like many things are going to get much cheaper. We can have much faster economic growth. We're already seeing what AI is doing for access to high-quality healthcare, education, and more. In the coming years, We expect to see robots make many products and physical goods cheaper as supply chains get automated. The limit to how far this cost reduction can go may only be government policy. But the other side of this coin is that current jobs are going to get disrupted as AI can do more and more of the things that drive our economy today. It'll be very hard to outwork a GPU in many ways. It'll be easy in some other ways. For example, we really seem hardwired to care about other people much more than we care about machines. We're somewhat less concerned about the long-term future. Technology always disrupts jobs. We always find new and better things to do. The people of 500 years ago would have thought that our current jobs often look silly, like ways to entertain ourselves, create stress. And the people 500 years from now hopefully will look at us, hopefully look to us, like impossibly rich people playing games, trying to find ways to pass their times. But we should all hope that they feel much more fulfilled than we do today. I'm confident we will keep being driven to be useful to each other, to express our creativity, to gain status, to compete, and much more. But the specifics of what we do day to day will probably look very different. Each generation has built on the work of the generations before. And with new tools, the scaffolding gets a little taller. This collective external lattice, the set of tools that we have built up around ourselves, is remarkable. And we are capable of doing things that our great-great-grandparents couldn't have dreamed possible. It is a moral imperative to make sure that our great-great-grandchildren can say the same. And technology, and especially AI, is how we're going to get there. For a democratic AI future, it is not enough to just give people tools and wealth. We also need to give them agency and power. The vision that AI companies lay out fundamentally reduced to either unilateral control or decentralized power. Sharing control means accepting that some things are going to go wrong in exchange for not having one thing go mega wrong, cemented totalitarian control. This is a fundamental trade-off of democracy, and it is one that we believe in very strongly as the way to give everyone collective agency over the future. Of course, this is not to suggest that we won't need any regulation or safeguards. We obviously do urgently, like we have for other powerful technologies. In particular, we expect the world may need something like the IAEA for international coordination of AI, and especially for it to have the ability to rapidly respond to changing circumstances. The next few years will test global society as this technology continues to improve at a rapid pace. We can choose to either empower people or concentrate power. Thank you very much.
Okay, so that is Sam Altman talking about how India is one of the fastest growing markets for codecs and how democratization of AI is possibly the way to go going forward. And interesting statements that, technology does always disrupt jobs. We've seen it throughout history, but there are other jobs which will come up as technology, adapts. But interesting takeaways, and we'll be listening to that as the day goes on. We need to wrap up on Halftime Report, but Business Lunch will take all of the action forward. Thanks for watching.